What is distribution commission in mutual funds and why it is bad for an investor? Let's discuss about it in detail in today's Market Secrets investment series. If you have seen our previous episode, you would have understand why you should never invest in regular mutual funds. I'll leave the link to the episode in the description section of this video, or you can click on the top right corner right now to watch the video. To put it short, distributor commission is the main reason for not to invest in regular mutual funds. In addition, there are many reasons why you should never invest in regular plans. In addition, there are many reasons why you should never invest in regular plans. Number one, it provides no value add. Regular plans add no value to the portfolio of an investor. All it does is eating away a part of your portfolio and make the distributor richer. This cost scales with your portfolio valuation. So the more you invest, the more your investments grow in value, the more money is taken out of your investments. If the person sold you the regular mutual funds isn't actively managing your folio, that too in a good faith, then this approx 1% payment every year is just a free money for them. Just like compound interest, this will compound your investing costs. Number two, bias against the investor. The distributor who subscribes an investor to a regular plan is inherently biased against an investor because the distributor would also recommend the funds which have higher distribution commission regardless of whether the fund is actually good for an investor or not. So if you are invested in regular plan of mutual funds through the distributor, do review your portfolio to understand the expense ratio and the commission part that goes to the distributor from the expense ratio. Number three, it's unfair. You might have went to a mutual fund distributor and based on his inputs, you would have placed a purchase order 5 or 10 years ago in the regular plan of a fund and also set up an SIP on a fund. This one transaction and the subsequent SIP payments have been lining up the pockets of the distributor every day for the last 5 years, and it would continue to do so as long as you have even a single unit in the regular plan of the fund. Let's say you invested only once 5 or 10 years ago and didn't create an SIP. Even in this case, your distributor will get the commission every single day. The distributor, who is not at all involved in the process of managing your portfolio, is taking part of your money for free in this case. All the work related to your folio is handled by the respective AMCs. So there is no reason for you to pay the distributor fee unless he gives a regular periodic advice on your investments in good faith. This payment model of perpetual payment in eternity is rarely seen in nature outside of this one use case. Imagine visiting a doctor who demands 1% of your assets every month in perpetuality till you are alive. Would you do it? Think again. And lastly, it's sneaky. For most mutual fund investors out there, the disadvantage of investing in regular plans are not well understood. Lack of financial knowledge and the fear of complexity have driven a generation of investors to blindly trust their distributors without looking too closely at what is happening. But this charge is so sneaky. There is no column in the account statement sent by the AMCs that include an entry for an amount that went to your distributor in the last 1 month, 1 year, or even 5 years. There is no way you can find that amount easily from anywhere. If the distributors have faith in their financial advice and planning, they should have no shame in openly sharing with their clients how much they have made as commissions, or the distributor should send an invoice to the said clients. But they don't, and to hide this daylight robbery, the payment is done by the AMC to the distributor directly at periodic intervals. So that's why I call this charge is sneaky. So despite of all these disadvantages, you may ask, why does regular plan exist in the first place? Well, The AMCs use these commissions to lure the distributors to their funds, who will in turn bring in the clients and their money. So both the AMCs and the distributors will earn more and more fees when more money is invested in their funds, and they'll continue to get this as long as people are invested with them. So this will generate never-ending flow of money or profits for them, regardless of whether the clients, that is you, are getting the profit or loss. But you may say, why would my distributor recommend such funds? He's our family friend or a relative and has our best interest at the heart. If that person really did have your best interest at heart, he wouldn't have recommended funds with higher total expense ratio. If he is doing that, he has his own interest on greater priority than yours. This wouldn't be a problem in some other case, but here it's about your money and not his. Regular plan distributors don't have to recommend good funds, because if it doesn't perform well, they could just tell you that the markets were bad this year. Keep doing your SIPs and buy at lower prices. Your uninterrupted inflows in the regular plans makes the regular plan distributor richer. This is just free money without any investments. Who wouldn't want it? So do you still think you should invest in regular mutual funds? Think again. That brings us to the end of today's session. Thanks for watching. Hit the like button if you have enjoyed this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get invited for the live sessions. Thanks for watching. Have a great day. Goodbye.